Thank you for watching another scintillating episode of the Trade Lab. I'm sure there's people out there that think that this is like the most boring thing that you could possibly be doing, even though I love it, obviously. So I am out of town again. Internet seems quite stable, although I'm always so worried about it. But we're looking good. Everything everything seems to be nice. I play competitive tennis and it's tournament. We're starting to go into tournament season, so I'm going to be doing more and more of these um, out of town. So, okay, the topic today is primarily around the trade that I put up in the weekly blueprint for MSTR. And MSTR is a really interesting one because they back everything by buying Bitcoin, and you can see down in the bottom right, MicroStrategy funds Bitcoin buys via common stock and high yield preferred issues, raising dilution and financial risk, right? So that's just a news clipping, but it's just, if you go into these clippings in TradingView, there's always a whole bunch of stuff in here about Bitcoin. And so you can go read about it if you're not familiar with MSTR. And I don't trade crypto; it's outside of my wheelhouse. But I took a look at a few things with this before the blueprint, and I decided to include it in there because I thought it was pretty interesting and unique and all that sort of stuff. So I'm going to show you what I saw. We're not going to talk about the trades themselves because I'll mention the strike prices if I can remember them, and the trades were wins, but I'll just show you what I was looking at. So this yellow line, this vertical line here is April 20th. That was the Monday that the blueprint came out. So I wrote the blueprint on the preceding Friday and Saturday, right before that. And so you can see if I blow up here, when I was actually writing the blueprint, it was like we were marching on this way up to the top right here. And so this by itself, talking about this after the fact is by itself worth talking about because this is risk. Right here, I wrote this thing right here on Friday, April 17th, and the Saturday, proceeding right in between here, in between these two. And it went up, right? You can see it went up. It peaked up here on Wednesday, the 22nd of that week. And then it had the Thursday and Friday here, it had good days that were above the days, substantially above when we wrote when the blueprint came out. And so because I suggested 1 week puts on this stock, it was a win, right? But this is risk, right? Because we hit this top right here, and then this thing came tumbling back down. Now, if you had chosen the strike prices, and I think the strike prices I put up were 135s and 140s, 150s, then those are still safe. But if you had gone any more risky, you'd be looking at, and if you'd gone any farther out, you'd be looking at assignment right now. So let's take a look at this. Let's take a look at a couple things. You guys know I like the Ichimoku cloud. And the reason I've got this line here is because if we look at MSTR on a scale that we're looking at now today, so right now at this point, this isn't very good, right? On this 1 hour candle, we've got a negative linear regression. We have now the blue conversion line on the Ichimoku cloud crossed up above the red, which is in the Ichimoku. It's not a golden cross, but it's kind of like the same type of thing, right? But we have a red cloud, and we have a lot of signs in here that the stock price is in or below the cloud. The lag line is below the cloud. So there's not, if you were looking at this today, it would not look very good. On the day, it's better, right? It's still coming down, but you can see where it looks like if this continues, this trend, it's not going to look very good, right? But on a 1 hour cloud, looking back at this, as if like I put the yellow line all the way over to the screen, right? And I'm not going to keep it there, but just so you can see, like, this is what we were looking at. Like when the blueprint came out, like this is the view, right? And so you can see here pretty standard stuff. Like you've got this nice green cloud. It's a little bit thin right here, but it's, it kind of had opened up previously. You've got a blue conversion line that has been above the baseline, the red baseline, for quite some time. The lag line was above, if you look at right in this area here, right, the lag line back here was above the cloud. So like this is a buy. Like this looks good. And it looked good on this one too. On the day Ichimoku cloud, we had a buy as well back then. So that looked good. The thing that differentiated this one from the normal stock that I put the analysis out for is the connection to Bitcoin. So if we go and we look at Bitcoin, and I think so I've got the same line here. This is still the April 20 line where everybody was either, toking up on 420 or they were looking at stock items, and hopefully not both. So it's the same sort of thing here. Like if we look at this at Bitcoin, we say, okay, well, is Bitcoin tradable? And obviously, no, we're not trading Bitcoin, but we care about the health of Bitcoin, because if Bitcoin is dropping, then people investing in MSTR might be pulling out, right? Like they're tied together in some type of way that we don't exactly know how much, but to some extent, right? And so on the day Ichimoku cloud, we're good. You can see this looks really good, and it might be affected now in the future, right? But when we made the trade, when we put the trade out, it looked good. And then on the 1 hour, if we go back here, and you can see, look, like the Ichimoku cloud, look at that. Like you don't even need to understand the cloud. All you need to understand is trending, right? All you have to do is look at this for 1 second, and you can see based on the red in the cloud and the linear regression, it just doesn't look great on a 1 hour. But if you go back here to this portion, right, and you see this and you see, okay, well, this doesn't look great either, right? This doesn't look amazing. We're actually at a bottom here. But here, and so like this part of the analysis was a little bit like, okay, well, what's going on, right? What that doesn't look great. The day looks great, the 4 hour looks decent, but and all of it looks good on MSTR, but what about this Bitcoin trend that doesn't look great? So then if you guys read the blueprint, in the blueprint, I always do like a week at a glance. And in there, I put in like levels for, what did Dow Jones and S&P and everything close for that week, and what's the percent change from the previous Friday. And I do the same thing for Bitcoin. I put it in there where Bitcoin's at, because even though I don't really trade crypto, knowing that is a reasonable fact to keep in mind when you're trading anything about the market, right? Just kind of these macro details. So here's the thing. Bitcoin was dropping, and part of the guidance that I suggested was, well, if Bitcoin can hold some of these moving averages, then we're good to go. And so again, here's April 20. I wrote this thing back on. Let's look at the 4 hour, because it's a little bit easier to understand exactly what's going on in here. So we blow this up again. So here's Sunday. Here's Saturday. That's still Sunday. Okay, let's look at a day here. That'll make things super easy. So this is the Monday of trading. This is Sunday, Saturday, and Friday is this green one right here where I started writing the blueprint. And so I said in there, if we can hold these moving averages, then make the trade, right? Like if we can hold the moving average, then go ahead and make the trade. And so now I'm going to step back again. I know I love to trace around in the time frames, but being able to like stack time frames in your brain and look at time frames across the 1 hour, 4 hour in day, especially candles, is super important. And then for entry and exit, like the 1 minute candle, I use that a lot in the 5 minutes. So, but anyway, we look back here and we say, okay, well, back on Friday, this thing was up, right? It came down on Saturday, it hit this thing and it bounced up, right? By Sunday, Bitcoin had bounced up above this. Now it lost it on Sunday. And then going into trading on Monday, you're saying, well, okay, the guidance was like it has to hold the moving average in order to make the trade. So then what happens? It bounces right off of this middle one, the 10-day, right, and it comes up and it passes, breaks through the 5-day, and then it tests it, and we're off. And by this time it's Wednesday, right? So somewhere inside of here, you need to you know making the trade, an investor would have needed to say like, oh, well, that's either good enough for me or it's not, right? Like if that's our criteria and we need that to feel good about the trade, then, we either wait for this, we look at this here on Monday, it's above, or we look here on Tuesday, it's above because it bounced. That's a good indication, okay, we're good. Or on Wednesday, you see it bounce up and we're good. So that's kind of where these moving averages came in for Bitcoin. Now, if we go back to MSTR here, here's the same set of moving averages. And these are kind of interesting because we've got MSTR trading. Let's start with the 50, 100, 200. We have MSTR trading this whole time, both before the blueprint came out and after. It's still trading between these two moving averages, right? That the 230 is the 200-day and the 148 is the 100-day. And so it's trading in between there, right? And this 100-day is a pretty good, it's long enough to be a pretty good support level. And you can see where it broke through right here, right? But this was part of the trade criteria for MSTR also, right? Is we've got to maintain this guy, and then if we pull in the 5, 10, 20, we had to maintain that one. And look at this, right? Where on Monday, the 5 and the 100-day are essentially the same thing, right? And we hold those. Now, again, nobody knows what's going to happen. So if we fast forward this range right here where we start testing and dropping through that, that's Friday of last week. That's the Friday. So that's what was saying earlier. Like that's risk right there. It's like we can't predict the future. So like all we can do is like do the best analysis we can, and then turn around and make a little bit of discretion about like, well, how much risk am I going to take based on how solid the analysis is. So it just so happened that we chose strike prices that were super good, right? And we said, okay, well, we held this, but we're still a little bearish about the market, right? We're still feeling bearish about the market. And so the strike prices were down like in the one, and again, I don't know them exactly. I don't memorize all of these things, but it was like 130s and 140s. It might have been like a 150. And so those were safe, right? Like this 150.10 right here, actually back earlier, right? It was like down at 137. And so that was probably about a strike price that I mentioned, like this is a good, support level, right? And so we chose the strike prices in such a way that we didn't have to worry about assignment. Like all of those MSTR puts, if you'd followed the blueprint strike prices, they all assigned worthless, or I'm sorry, they expired worthless. But it's a different story now, right? If we were going to go back and do the same analysis on MSTR, here we are 1 week later, like whole different ball game, right? Just totally different ball game. So I think that's probably all the detail that's really worth going over on MSTR. I will mention one other thing, and that is I like to throw out this standard deviation, right? And so in order for us to have not had those strikes expire worthless, we would have had, see this 130.84, right? We would have had to have about a 2 sigma negative event on the stock or on the 1-day candle. right? And so that's that's a pretty good move over the course of 5 days now. MSTR is uh, is Bitcoin backed, and that's risky, right? So like, there's no telling whether that's going to happen. The beautiful thing is that one is that it didn't, and two is that you reap the benefits through the premiums, and so MSTR premiums, I think, were like in the 300 some dollar range per contract, which would have been, at the current price 165, like that's almost 2%. So 2% weekly gain on that money invested is pretty good. So that's MSTR. If anybody has any questions about it, just comment on the video. I'll go ahead and take a look at those, and or I suppose ask them in here. Although I don't have my other monitor, so I'm like flipping back and forth between the YouTube screen and trading view. But that's it for MSTR. So there was also another question here that came in from one of the GTH Trading Patreon members, to talk a little bit more about SPX and SPY. And I think, Ian, I can't remember whether you wanted to talk about SPY specifically or just SPX. But in either case, so here we go. So I'm going to start by looking at SPX. And if you recall, and I had to actually redraw these. I deleted some of these lines, so I had to redraw them. So they may not be exactly the same as they were, but like you get the idea, right? So we've got this expanding channel, right? And we have this price action bouncing around inside SPX. So last time, I think it was just last week, or maybe it was 2 weeks. No, it was last week. It must have been last week that we talked about it, because not that many days here have passed. But the big question on the brain was like, well, what happens right here, right? What happens in this? There's a good size circle. What happens in this little range right there? Like, we had all of this Iran war stuff going on, and it's like, well, I mean, is everything going to fall through the bottom, or is it going to blow through the roof, right? And so, fortunately, things have gone decent from the war perspective, and the macroeconomic data has been what we would expect, and so people are like, they're kind of becoming desensitized to it, and we're kind of moving slowly towards this bullish market. And if you talk to a lot of people, they might be like, oh man, we're totally bullish, everything's bullish. No, I think that's probably overkill. As traders, we're supposed to be scared when things are going up, and we're supposed to be excited when things are going down. So I'm gonna kind of take a stance here that we're still like bearish to neutral, and that's that'll help with risk management, thinking about things like that. But in any case, I'm just rambling, and I get to ramble because it's my live stream anyway. So, but so we've seen this increase right here. We saw this point, and we're like, well, is it gonna bounce, or is it gonna go up? And it's gone up, and that could change really quickly if things seem to be flaring up a little bit now again in the Middle East. But it seems like we're probably getting towards the end of this. But like, who knows? It's anybody's guess, right? So let's take a look at this here, and this is where I find the analysis for SPX to be a little bit. You kind of have to use some other tools here to take a look. And so here's the 50, 100, 200. Okay, very bullish there, right? I mean, we even though we kind of have this 50 day that crossed down under or below the 100 day, it never got the death cross on the 200 day, and it's starting to come back up. So bullish maneuvers there. And in terms of strike prices and support and resistance, if you tried to write an option on this thing at 68.53, you probably don't get anything. Like, I mean, it's a good support level, but like it's not really that good for making money. It's probably too far down, especially since SPY premiums aren't that great anyway. So like, it's probably too far down. if we look at the 5, 10, 20, we're getting a little closer here. And these are some good, actually, I'll go to a day, or I'm a 1 hour here. So in this case, we've got a couple of different items. We have the 5, 10, 20, which act right now as support levels at 71.64 and 71.36 and 69.76. And those are good support levels. They're right here. But we also have this support of this expanding channel, right? Which at the moment is like, right here at 7,100, right? So there's some good support levels there. The exponential moving average, notice that. I mean, why do these it always surprises me, but like, look at this support. Like we've got the expanding channel, which kind of like has this, confluence here with the exponential moving average. The 71.22 is the 9-day exponential moving average, and this middle this middle moving average, which simple moving average, was a 10-day moving average. So that's a pretty good group right here. Like if you're looking at writing strike prices and you want to make more than beer money on the premiums, then you choose these, and that's where the discretion comes in. If you want to be a little more risky, you go to the top and write for like 71.65, and if you don't, you write for the bottom at 71.20, right? So those are good strike prices. But here's the thing that about this. Oh, and actually the Bollinger Band. I want to pull up the Bollinger Band on the day chart, because this is and actually this is a good segue into what I want to say about being careful about trading SPY. And we'll go down to SPY here and I'll look at it for you in just a quick minute. But since it's all based right on the S&P, we're taking a look at this. The S&P itself, right? This Bollinger Band is kind of like what I would consider an upper bound for the near future, right? So you've got that kind of that 2 sigma movement, and if SPX goes crazy, then like this point up here, this 73, 72-ish, that's, I just can't imagine that we're going to go past that point, right? But that ends up being the only real resistance level that we see here. That's it. That's the only resistance that we see here. Even the high, like we're sitting at the high right now for SPX. And so the all-time high. And so that's where this gets a little bit tricky, is you say, well, okay, all the MAs are below and they give us some good, support levels, but like what about resistance levels? Can this thing keep going up? And that's the risk here, is that we're in a lot of ways we're in this uncharted territory. So we've got like a potential resistance here at that 73.70. We have a resistance right at the high, the 72.20. And there's not a lot else to even look at here. And so when you decide to go out and trade SPY, you got to keep in mind that we might see all-time highs, right? But like this is the place where you probably, even though it's bullish, you probably want to exercise some pretty good caution here, because if it's at all-time highs, like that's when people are getting out, right? Or at least some people, right? Some people are going to have the philosophy like, okay, all-time highs, I got in, 3 months ago when it was at local minimum values. I'm selling tomorrow. I'm selling as soon as the, pre-market opens on Monday morning. I'm selling this thing, right? So like you got to be a little bit more careful with sell-offs when that happens. So let's go look at SPY. What do we have? What do we have with SPY? We can turn on our Ichimoku, right? Looks good. 1 day Ichimoku. Like this is, like I said, this is why I love this thing. I get these comments from people and people are like, oh, this is arduous, this is too complicated. No, like in 1 second, you can look at this and you can glean all kinds of information once you get used to it. And it's not any different than any other indicator, right? It certainly isn't like the holy grail or anything, but like this is super useful for like starting to weed stuff out. So One day Ichimoku looks good. Totally, like, just hit that. Like, we've got the conversion line above, the lag line, the green. Not the cloud isn't as big as I'd like to see it as much area, but we're in a new trend here, right? And so this red baseline just, in fact, let me turn off linear regression here. The red baseline here just passed up above the cloud. So like very, very new buy signal within the last day. We go down to 1 hour, same thing. We've got a thin cloud, but it's okay. Like we decided this is a new trend. And so same thing, buy signal on 1 hour. We look good there, right? Like all of this stuff looks good. And then not that these are going to be really any different. The moving averages aren't going to be really different than looking at SPX, but we're kind of in the same boat here, right? Where we talked to the 50, 100, 200, they're just too low. They're just too low to matter. But if we look at the exponentials here, we've got that same grouping, right? So when you start talking about actual strike prices, right, on an actual tradable ETF, we're at the same place, 709.97. So call it 709, right? If you want to trade at the least risky of these three, call it 709 and give it some room under that moving average. And then the most risky there, 714.21. You could, if you want to be risky about it, you could call it 715. And just hope that nothing happens, crazy out in the Middle East or whatever. So and I think we're probably good, but like you got to temper it. Like you can't get overly excited, or you're gonna get assigned on this thing. And getting assigned on SPY. Now a lot of people love to write, iron condors on SPY, and they love to write straddles and strangles and stuff because it doesn't move nearly as much as an individual stock, obviously. But here's the thing that you want to keep in mind is that the premium on this thing is not substantial, right? And so you got to keep in mind, and I'm not saying that like everybody should be out there like trying to like get over 1% gain on all of their premiums for everything they trade, not even remotely, right? Like what I'm really saying is that if you're gonna sell options on SPY, just make sure that you feel good about the premium that you're making, because keep in mind, like SPY is at 718, right? If you wrote a put for SPY at 709, let's just call it 710 because the numbers are easier. That's a $71,000 investment that you're putting on the table, right? The cash that you're tying up per contract. So that's a pretty big, if you're a trader who says, well, I'm not going to tie up more than say 10% per trade, which, some people tie up a good bit more than that, which is probably not smart. And some people gawk and they're like, what? I would never tie up more than like 2% or something. But if you tied up a huge chunk of 10%, that means that you have nearly $250,000 sitting in an account. And so I think most people don't have that, right? Like a lot of people that are, trading and they have a day job and they're trading on the side don't have $250,000 sitting around in there. So, if you don't have $250,000 in your account, then trading SPY is like ends up becoming like that's a huge chunk, right? And granted, like we talked about, like it fluctuates less, it's less risky. Obviously, there's nothing to go out of business, right? SPY is not going to go out of business. But it's just something to think about, right? Like just think on this for any trade that you make. Like for the money that you're tying up, for the money that you're putting on the line, do you make enough off of that premium to feel good about the trade? That's all I'm saying. That's all I mean, right? And again, like, you've got you can do the 0 days on SPY every day, and you can like actually make decent money at it if you really, really focus on it, right? Like if you get really good with the price action and you spend all of this time to understand SPY really well, you can definitely increase your profit levels, but it also takes, it takes some time there. So hopefully that, answers some of the questions on on SPY. I see the question about don't fall on the 250K. If 70K is 10%, isn't that 700? Yeah, I'm sorry if I said 250. I thought I meant to say 750,000. Maybe I said 750,000. Yeah, yeah. If you're writing SPY 70K on SPY, 700K, that's like your account. 10% stake would mean your account is like 750,000. Sorry about that. Um, so yes, it's just a lot to put in now, and some people love it, right? Some people they want to trade SPY. They really love it. So those are some of my thoughts about SPY. I mean, I really think that this range right here, this 709 to 714, is probably pretty safe. Certainly is safe for like a 0 or 1 or 2 day expiration, provided nothing crazy happens. And that'll change, right? That'll change. So like, so I know you're on GTH Trading, and if you're trading SPY, um, come ask, right? Come into the live trading, and we can redo the analysis. And I'm always happy to do the analysis. And the goal really is that, like, whether people follow my analysis specifically or whether you make your own from it, that you kind of get good at it. But the idea is that I can kind of pop them out, right, when people are busy with their day jobs, right? Since this is what I do. So that's always an option at any rate. Thanks for coming and watching. And I think potentially I've been getting more and more questions lately. So next week, unless anybody has any things that they'd like to see specifically, I may just do like another Q&A, because it's been a few weeks since I've done that. So anyway, thanks again, you guys, for watching. Enjoy the rest of the week, and we'll talk to you next week. Take care.